Hello and welcome to another video session. Beanfx Trader. Our website is www.beanfxtrader.com. You can visit our website to see the strategies we have published on how you can trade forex and volatility index. Our channel Beanfx Trader, I want you to subscribe to our channel so that you get to see our videos. Also, make comments at the bottom of our videos so that if you have any question, you can state it below the video. If you want us to do any video on any strategy, you can also state it below the video. We'll try as much as possible to make the video for you. Also, want you to like our video, hit the notification button at the bottom of the video so that you get to see. You'll be the first to see our video when we release a new video. Okay, today we'll be looking at a strategy that you can use to trade volatility index. This strategy was published some time ago, but now we've added just one more indicator window at the bottom of the setting of the setup. Okay, now let's go straight to how it works. All right, I have a volatility index 75 15 minutes time frame on my chart, and I have four windows. The initial publication had three windows, but this time around we have four windows. We have the main chart. This is the main chart. I have the main chart. This is the main chart. Okay, we have indicator window 1. This is indicator window 1. We have indicator window 2. These are indicator window 2. And then we have the additional indicator window, which is indicator window 3. This indicator window 3. Now all these windows, they have their own signal, and the synchronization of all these signals on all four windows may likely give you a perfect trade entry. Okay, now let's start with the main window. This is the main window. Okay, now let's look at the indicator settings. I have fractals. I like to put fractals on my chart to help me with the identification of support and resistance areas on the chart. Fractals will tell me when price is rejected at any particular point, and then fractals will leave an arrow behind pointing in the direction against the direction of the rejection of the price rejection. Okay, that's basically the reason why I always put fractals on my chart. Okay, then I have a moving average. This time around I have 5-period moving average, simple moving average, applied to close. Then I have 240-period moving average, linear weight. The method is linear weight, applied to close. Now the color for the 240 period is blue, while the color for the 5 SMA is red. And let's go straight to the main chart and see how it works. Now this is the main chart. The two moving averages are expected to cross, like we have a crossing here. We have a crossing here for us to have a bullish run. Okay, so when the red line cross up, like we have around here, we expect a bullish move. When it cross down, we expect a bearish move, like what we have around here. We expect a bearish move. Okay, let's move forward into future. Okay, let's move backwards. Like there's a crossing here, upward, expect a bullish move. downward, a bearish move, upward, bullish, downward, bearish, upward, bullish, downward, bearish. So we can continue like that. Okay, so that's basically how the indicators, the crossover of the indicators on the main chart, how it works to give signal. Remember, when the red line, which is our 5 moving average, 5 period moving average, when it crosses down the 240, you have a bearish, you expect a bearish price move. But when it crosses up, you expect to go long, scalp, and then buy. Then when it crosses down, you expect to scalp, sell, and it crosses up, you expect to scalp, buy. Okay, so that's basically how the crossover of the moving averages on the main chart, that's how it works. Okay, let's look at the settings of indicator window 1. Okay, indicator window 1. We have relative strength index, 5 period, apply to close. Now the color, we expect the color to match the background of the chart. Okay, so we also have moving average, 3 period moving average. The method is simple. Okay, and then we apply to previous indicators data, and the color is blue. Then we have envelopes. The period is 50, shift is 0, deviation is 50, method is simple. Then we apply to first indicators data. Now the color of the upper band and the lower band is black. Okay, now we have moving average. Period is 1 period. The method is linear weight. Apply to first indicators data, and the color is red. Then we have moving average, 3 period moving average. The method is linear weight. Apply to first indicators data, and the color is blue. Okay, so that's the settings for the indicators on indicator window 1. Now let's go to the chart. Remember, this is our indicator window 1. Now how this works is, when the red and the blue moving average, when they cross up above the mid band, okay, or above the blue, the moving average at the middle of the envelopes, like we have around here, when it crosses up, we have a buy. Okay, when it crosses down, we have a sell. When it crosses up, like it crossed down here, we anticipate a sell. So it crossed down around here, we anticipate a sell. Okay, or with a cross up somewhere around here, we look to buy. Okay, all right, so that's the way it works, like we have around here, look to sell around here. Okay, around here we look to buy. Okay, so that's basically the way it works. Around here we look to sell. Okay, and here we look to buy. We look for a buy, for buy opportunity around here. So that's basically how the indicator, the indicators on indicator window 1 works. Now the envelopes, the upper and the lower band of the envelope sounds as the resistance and support points, like we have around here, as the moving averages moves around the upper band, expect price to drop. As the moving average moves around the lower band, you expect price to rise, something like this. Okay. As they move around the upper bound, expect price to drop. Okay, so that's the way it works. All right, like we have a dip around here, then a dip around the lower band around here. Okay, then also a sharp rise above it, so we expect price to rise. So that's the way the settings of indicator window one works. That's the way it works for this strategy. Okay, don't forget, as the moving averages cross down on the moving average within the on the horizontal moving average within the envelope, you have your sell. As the cross up, you have your buy. Okay, buy for cross up, sell for cross down. Okay, buy for cross up. All right, so that's the way it works. So let's look at the settings for the indicator window 2. We have relative strength index. Okay, 5 period, apply to close, color is red. Indicator window 2, we have a moving average 50 period. The method is simple. First, indicators data, and the color is purple. We're still looking at indicator window 2. The next one is moving average 100 period. The method is exponential. Apply to first indicators data, and the color is blue. Still on the indicator window 2, we have another moving average 200 period. Okay, method is exponential. Apply to first indicators data, and the color is green. Still on indicator window 2, we have Ichimoku. The 10 can sen is 9, Kijun sen is 26, Senko span B is 52, but the up Kumo is green, down Kumo is red, and other the Tenkan and the Cajun, the color is expected to match the background color of the MT5 chart. Okay, so those are basically the indicators you have for indicator window 2. You have the RSI, moving average, then Ichimoku. Now let's go to the chart and see the way it works. Okay, so this is a simple one. When the red moving average crossed down below both the moving averages, the horizontal moving averages, and the Ichimoku, you have a sell. Like you have a cross down around here of the red moving average, which is let's look at the red moving average. Red moving average, where is it? No, is it even okay? It's the RSI. When the red RSI line, okay, this is the red RSI line. When it moves below the Ichimoku and the moving averages, you have your sell. Okay, when it moves above both the Ichimoku and the moving average, like you have around here, you have your buy. Okay, when it moves below, you have your sell. When it moves above, like it moves above here, you have your buy somewhere around here. Okay, and when it moves below, like you have here, as it continues to trigger down here, you sell. Okay, trigger down, you sell. Trigger down below both the moving averages and the Ichimoku, you sell. If it goes above, you buy. Above both the moving averages and the Ichimoku, you buy. Like you have around, like you have somewhere around here, you buy. So that's the way indicator, that's the way the indicator, the settings for the indicator window 2, that's the way it is applied, and that's the way you read the signal. Don't forget, your focus is on the red RSI line. When it moves below both the moving averages, the moving averages that are aligned horizontally, and below the Ichimoku cloud. Once it peeps below, prepare to sell. Okay, as long as it stays below all the indicators, you sell. If it is above, you buy, like you have around here. Like you have the red RSI line moving above the indicators. Okay, you buy. Okay, as it continues to go above, you continue to buy. All right, this is another one, you buy. So that's the way it works. Let's see, this is another one, you buy. Okay, so that's the way indicator window 2, that's the way the arrangement is. Okay, let's look at the last last indicator window we have. Let's look at it. Indicator window 3. Okay, just RSI. Okay, and the period is 10. Apply to close, and the color is red. Now, how does this work? This one is simple. Once the RSI line cross, okay, let's look at it. There's also one part of it. The indicator window 3, we have the level. Okay, we have 48 and 52. Level 48 and level 52. So once the red RSI line cross between from the top, then to crosses within and attempt to cross down, you prepare to sell, like you have around here. You sell once it enters between the two levels, that's the 48 and 52 level. You sell once it enters from beneath and it goes to enter between, you prepare to buy or you buy. Okay, like you have around here, prepare to buy or you buy. All right, like you have around here, prepare to sell or you sell. Okay, so that's the way it works, like you have around here too. Prepare to buy or you buy. So that's the way this setup works. Okay, now the synchronization, when you synchronize all the signals on all 4 windows, can give you a very good signal. Okay, near perfect signal that you can easily scalp some profit. Okay, don't forget, when the red line on main chart cross down on the blue moving average, when the red moving average cross down the blue moving average, you sell. When it crosses up, you buy. Okay, and when the moving averages cross above the horizontal moving average within the envelope, you buy. When it crosses above, when it crosses below, you sell. Okay, when the red RSI line crosses above both the Ichimoku and the moving averages, you buy. Okay, and when it crosses below, like you have around here, you sell. And when the red RSI line, okay, enters from under, enters into the level 52-48 level and attempts to cross above, you buy. Okay, same thing for when it's same thing for when it crosses below. Let me see, same thing for when it crosses below, like it crossed below here, you sell. When it crosses above within the level, you buy. When it crosses below the level, you sell. So the alignment of all signals on all the window will give you a good signal. Okay, but there are times you just need the alignment of signals on at least 3 out of all the 4 windows. So in as much as you can get the alignment on 3, that can give you some level of head start. Okay, at least you need 3 alignments, 3 signal alignment on 3 windows for you to at least get a good trade entry. So it's a very good strategy. This is a modified part of the strategy. The initial part of this very strategy only have the main chart, only have this main chart, okay, indicator window 1 and indicator window 2, okay, but we have made it in an advanced stage to include this part for additional confirmation, okay, to include this part for additional confirmation. So that's it. Ensure you backtest this strategy before you start to trade on real account. For you use real money, make sure you test it on demo account to be sure you know how it works before you start to use real money to trade using this strategy. This strategy is for scalping small profit, quick profit on the volatility 75 index. You can use this strategy on 5 minutes time frame, 1 minute time frame, 1 minute time frame, 5 minutes time frame, 15 minutes time frame, 30 minutes time frame, 1 hour, or even 4 hours. Okay, you can use on 4-hour time frame. Okay, but make sure you understand how to use this strategy before you go live, before you apply it on real accounts. So if you have any question as regards this strategy, you can state it below the video. Try as much as possible to respond to your question. Okay, want you to subscribe to our channel, Beanfx Trader. Those of you that have subscribed, we say a big thank you. We have over 1,000 subscribers, and this is a very good motivation for us. Okay, so we say a big thank you to all our subscribers, and if you are yet to subscribe, please hit the subscription button. Okay, then want you to like our videos. Okay, if you really like the strategy, you can just give your remarks below the video. Okay, and if you have question as regards any of our videos, any of the strategies in our videos, you can state it below that very video. We'll try as much as possible to clarify whichever part of the strategy you do not understand. Okay, all right. Also, don't leave until you hit the notification button. There's a bell button below the video. The reason why you need to hit that notification button is such that when we release another video, you'll see it on your notification tab. Okay, so you'll be the first set of people that will watch the video. All right, so that's that for this strategy. Till I come your way next time, is bye.